evening and welcome to this edition of Capital Market Live on Channels Television. It's Valentine's Day and definitely the market did speak this week and we're definitely going to analyze. I'm Will Libang, as I mentioned earlier. Now we begin with Europe markets. Let's see how they performed ahead of Valentine. The Pan-European Stock 600 closed lower on Friday after AI fears triggered another sell-off on Wall Street overnight. The Stock 600 provisionally closed below the flat line with major bosses in mixed territory. We saw the DAX close green at 24,914 points. That's up about 0.25%. We also see the FTSE 100 up 0.42% at 10,446 points. And the CAC 40 in France was also, we see that down, however, at 0.35%, 8,311 points. Elsewhere, let's look at international officials gathering in Munich, that's in Germany, for the Munich Security Conference, which runs through Sunday. And let's say in Asia now, how the markets perform. We see that traded low on Friday, tracking Wall Street decline as fears over artificial intelligence disruption drove the S&P 500 to a third straight day of losses. Now, certain pockets of the U.S. stock market have been hit this year by the release of AI tools that threaten automating tasks performed by some companies, or at least risk eating into their profit margins. Now, Japan's benchmark, we see that Nikkei 225 dipped 1.21%. We see the Shanghai index also down over 1%, and the Hang Seng in China is also down 1.72%. We look at now in U.S. markets, how did they perform at the close of business on Friday? The S&P 500 closed barely above the flat line on Friday as a key consumer inflation report that came in slightly lighter than expected failed to spark a substantial rally. Now the broad market index, as we see that ending, is 0.05% up. We also see the Nasdaq, Nasdaq also down 0.22%, and we see the Dow Jones up 0.1%. Now, the Bureau of Labor Statistics reported that the Consumer Price Index, which measures the cost of for goods and services in the U.S., the economy, that rose about 0.2% in January, reflecting a gain of 2.4% on an annualized basis. Now, the inflation gauge was expected to show 0.3%. That was the expectation on a month-on-month basis, and the 2.5 advance from the year earlier. But according to economists, that was what they were expecting. Let's move on to Nigeria now. We'll look at the unlisted equities markets that the NSD Securities Exchange, which closed the week higher as the week was up by over 7%, that's 7.73%. Strong bullish sentiments ahead of Valentine. We see that index now 3,974 points. The market cap was also up over 7%, 2.38 trillion naira. Trading activity was also positive. Volume was up over 7,000% to 1.095 billion units of shares traded. Now we saw value was also up over 1,000,000% to 1.41 billion. And we see trades closing at 236, up 69.78%. Now on price performance, Central Securities Clearing System PLC, IPOA PLC, and Food Concepts, they were the gainers for the week. They gained the most for the week. And when we look at the losers, that was led by Acorn Petroleum PLC, down 4.38%. We see that closing down. But let's look at the activity chart for most traded securities for the week. The Central Securities Clearing System, Joe Fluids, and Friesland Campina Wamco Nigeria, they topped the trades list for the week. Now over now to the NGX, where we saw Valentine moves also there. I thought the color was red, but it was green on the exchange. It closed the week on a positive note as the all-share index rose by 6.16%, hitting a new high to settle at 182,313 points. Market cap at 117.027 trillion naira. Massive for the NGX. Now, in terms of activity, investors exchanged about 4.65 billion units of shares. Also a green close. Volume, market value, that closed in the green, 193.326 billion naira. So total deals up to 286,751 trades closed up in the green. Strong performance for the NGX. Now look at sectoral performance. It was also positive. We see the banking was up 5.84%. Consumer goods was up 2.95%. Industrial was also up 7.09%. Insurance stocks were also up 0.65%. And oil and gas index was also in the green, 11.4%. Green performance for the indexes. Now, top gainers, we see that Zich's Agro Allied Limited was on that list. Union Dye Consult PLC and Dark Communications. On the losers chart, definitely is a zero-sum game in the market. The heaviest declines came from Abbey Mortgage Bank PLC, closing at 14 up naira, open at 14 naira, 95 kobo, closed at 11 naira, lost 26.42% for the week. We see Deep Cap, meanwhile, Deep Cap Management and Trust, Access Holdings PLC, Zenith Bank, they led the activity charts. Looking at that, the most traded stocks for the week. The rally definitely on the NGX is still going strong, pushing equities higher. We're seeing back-to-back records and raising fresh questions for investors. A lot of fears, a lot of concerns. Can the momentum be sustained? Is it time to lock in gains, or are there still value opportunities ahead? And how closely is the market tracking Nigeria's economic reality? Joining us now to break it all down is Ambrose Omodian, Chief Research Officer, Invest Data Consulting. Good evening, Ambrose. It's always good to have you join us.
Thanks for having me.
Ambrose, it's a really exciting time for the market. I'm really excited. But with the excitement, there's also that concern, that fear, like what's going to happen after this strong rally that we are seeing? What fundamentals right now can sustain this rally from here? What next?
Yeah, actually, in any markets, we expect to see the up and the downs. And that's the beauty of equity market anywhere in the world. But our market is in all-time high. For me, it's good news for the market. It's also true that things are really improving and things are changing. But for the players in the market, it's time to really play your plans. That means having a plan to trade. Don't just, because market is not all-time high, you are jumping in at this level. But I'll tell you that the factors behind the rally is still very much intact. Liquidity is the key fundamental of any market in the world. When there's liquidity, price about the world to move up, because when there's demand for equities, just like our simple economics, when there's demand for an item, price are likely to go up. And now that we're seeing funds coming from the newcomers in the market, coming from the PFAs, coming from foreign investors, and also other high net worth also in this market, looking at what value and opportunity. But for those that are newcomers, they might say, okay, the history of the market or the story of the market in 2025 was so juicy that yes, people make 1,000 capital appreciation, 400 capital in 2025, and that news is still what people are following at this point, because one, say that Nigeria market is among the top performing market in the world today, and for that, people want to look at what is happening in this market, knowing that yes, the structural reforms we are seeing also playing out in the market. For that, this market is going to hit higher. But one thing is sure that I tell you that pullbacks are the beauty of any market. That pullback, when it comes, how will you manage it? And also, kind of stock you are investing is very, very important. Are you just chasing your stock, I put it that way, or are you just put stock without fundamental? Okay. Or are you sticking to those that also pay you dividend? Those that that they are defensive in nature? These are the things that are different between the newcomers in the market and the intelligent investor, the old players in the market. That means at this point, let your investment objective and your trade or your plans, or your trade plan guide you at this point. Okay,
so I just have a question for that. Now that we're seeing some stocks really gaining a lot in terms of percentage value, price gain, capital appreciation, are earnings growth and liquidity strong enough now to justify the valuations we're seeing in the market?
Our market is still grossly undervalued, I will tell you that. If you compare Nigeria market to other African markets, you can see that our market to what we call a price to earnings is still below 10, which is also there. You can see other mature economy having a 25, 40. For Africa, Nigeria market, that means there's still opportunity in the market. Why I say so is that most of the companies we have seen, the result we are seeing can support the price. The only place that investors are really at this point to consider that the payout ratios or the dividend history of many companies are different from what was in terms of price. In Nigeria market, when people want to look at companies that have 8% yield in dividend, 10% in dividend, I'll tell you that thing is not in this market again with the prices we are seeing. That means when we start seeing corporate action and retail account, we might see some company that will disappoint most of the investors, and that is why pullback becomes very interesting. When they pull back, because in 2026 we're going to see fresh any centrally to match this price, because companies that perform well in 2025, that trend is likely to continue in this year. For me, I see that, it is time for you to stick those companies that have good fundamentals, good earnings power that will drive their price at the end of the day. That is the way to go. And also, like I just said, when there's liquidity, price will go up. But earning is for your valuation, to see whether the company will be able to match the price. And those I said are newcomers, because they want to invest in just low cap stocks. That is why if you look at the market dynamics today, you see that high cap stocks is on the rise, low cap stocks is on the rise, blue chip stocks on the rise. Then you ask yourself, who is playing all this? No, we know that the PFAs are the one that will go forward, the high cap stock and fundamental stock, and also because they are long-term investors. Why the newcomers in the market are still where I can make returns, because they are after returns. The PFAs are after what? Long-term investments to protect the capital they are playing, and also to create value. But those newcomers, because they hear the history, they've had the history, they've seen charts as well as being displayed. Now charts were seen all looking green, all going up. They want to come to the market now. I was putting 20 million, 40 million come to the market, and they are buying those companies that have no fundamental, because anywhere in the world we have different class of components. Then all of them are in the market, but the one you choose to beat your tent is what matters. Newcomers have been the tent on the local stocks, or no local that have no fundamental. Like systems are giving you year to date almost 400, 200, 150, 100%. Year to just I see up to like 2 months. No, but that is where people want to enter at the peak. But those that are there are some people that are still also appreciating that fundamental that will still go up more.
Okay.
Then I call it averaging high, or averaging up. But as it's going up, this company, I bought this company at 20 naira, today it's 40 naira, but I see the company going to 16 naira. We're already in at 20 naira. It's a different ball game.
Okay.
It's averaging up. That is another ball. Those that are jumping into low cap stock without fundamental are the peak. When any story change today, especially when they enter coming, the competition enter coming, and they didn't meet expectation of the market, those look after that have no fundamental will fall as well part of salt. That at that time will be complaining that I enter market, I'm now I'm not lost in wood. Why do I say this market I made money, but me I'm making loss? It's because you didn't enter with knowledge, you didn't enter the right company at the right time.
Okay, speaking of broad-based rally right now, you mentioned that the blue chip stocks are going up. You mentioned that the high cap stocks are also going up. The small caps, they're also penny stocks are also going up. But is this rally broad-based in terms of the sectors? Which sectors are benefiting more right now? Is it just banking and consumer goods that we're seeing this rally in?
Yeah, we ask broad-based. I'll say yes. It's across many different type of class of stocks. When in terms of sector, we have the strongest sector, have the weakest sector as we speak now. Which are the strong sectors that are supporting the market? I would say, to start with, I'll say, okay, the agro business, the oil and gas, we are seeing also increased buying interest in consumer goods. But I'll tell you for now, even when we are seeing move in Dangote and there's some livestock like Wapco, I said that today that the lacking sector is what? Insurance and the industrial goods. Why that of the oil sector, the consumer goods and the agro business, which is the commodity, are the one leading the market. Look at the movement from from almost 6,000 to almost 8,000, or from 5,000 in surplus. That have redefined the whole index. That's why I say that sector is one leading. We're seeing another in that sector also moving in that direction. Yes, if you go to the agro business, look at the way Presco is moving, Okomo is pulling. These are high cap stocks that also can impact our index. But in terms of Dangote cement and the Boa and Wapco, they are just trying to come up now. But all those ones that move, that's why index also moving up. But for me, investors should not pay attention to the market index, because we don't trade our index. Index for you to have an idea. If you want to make really informed decision, look at sectoral index to guide you, and also individual stock. That's why people know that anything you are doing on equity, you are doing risk on company. It's that person will tell me whether you make money or not. That means you need to understand the company you are investing, what is their business model, what is the price history, and where they are going. It's very, very key at this point. Okay,
so we've seen that the NGX, the index is year to date is over 17%, month to date over 10%.
Yeah.
Well, we'll see week to date over 6%. Speaking of risk in terms of company, but let's look at the macros. What macro risk right now could derail this rally that we're seeing right now? Do you think could hamper the growth of the NGX?
No, I want you to have that. Look at the macroeconomy. We're seeing different dynamics coming up now. Recently we had the Dangote refinery hitting 600 and capacity. It's a plus for the economy. The dynamics that is changing in the oil sector is also have the way of influencing the general community dynamics. That means we need to pay attention. If that is sustained, what is going to hit your capacity once and you go back to below your capacity? But if it's sustained, That is going to play a major game changer for Nigeria economy, because naturally we see that anything we are doing in Nigeria depends around oil. Even the electricity, everything is around oil, movement, transportation. If because of this now we have less importation of petroleum from outside the shore of Nigeria, automatically our efforts will be conserved, and that's why we also start seeing this exchange rate going down, and that will help a lot of companies to plan. You and I also know that yes, we can also start saving, and also we can now buy things. For me, it's a good news. Also, even though while we are importing things, we also import at a lower price. That means inflation also going down. That means the CBN forecast of 12%, inflation rate is possible.
It's possible
if this is maintained, is sustained. For me, it's a good thing, and at the same time also. This pre-election year, don't forget that liquidity will also be around. That's why people are thinking that we are tending towards a one-party country or not. But I'll tell you, during the pre-election year, liquidity will come from both the other parties, the incumbent. That for me, it's also going to find a way trickle down to the market. As they want there's liquidity, I want to see the kind of price we are simple. Good thing is that we can get our exchange rates right. The manufacturers can also plan, they can do forecast. Then I'll tell you, we are moving around, but we need also to look at the tax system we are bringing. It's going to happen, the whole thing we are saying. That means we need more education. It's not just sitting down in the office and rolling out plans for tax. With the people that are concerned, how are they absorbing it? How are they taking it? One thing is that you want to tax people. If they have still planned that as a government, we are planning that in the next 1 year, the 6 political zone, there's massive construction here and there. I will tell you, people can easily pay their tax with ease, because they are seeing what you are doing with the money.
Definitely.
But if we are not telling the tax, we're not telling us what you want to do with the tax. Even though you are planning, you are forecasting, your budget is about almost in deficit, you need to tell us this tax will come. What that would be the beauty of tax, that people now voluntarily
accountability and transparency will definitely help the economy.
Reform is good, but to say that reform is very, very key.
Let's take a quick break now. We have a lot to talk about. When we come back from the break, capital market continues. Don't go away. Welcome back. You're still watching Capital Market Live on Channels Television. We're talking about the NGX and the rally we've seen in the past couple of weeks since the start of this year. It's been back-to-back rally, and the NGX has been, investors have been benefiting from it. But what direction should investors be looking at now? Ambrose Ombodion, Chief Research Officer, Invest Data Consulting, is still with me in the studio to talk about this. Ambrose, so right now, what signals should investors be looking out for? What should they be watching out for? FX liquidity, or market breadth, volumes, foreign inflows, or earnings revisions? What should investors be keeping an eye out on for now?
Actually, in any market, when you be a successful investor, you must combine your fundamentals and your technicals. But we've said about inflation, expect to see general inflation figure. It also move towards southward direction. MPC is holding their first meeting in February this month. If we are seeing consistent in the month of December, even when it was a rebase, we saw a slowdown to about 1.5.2, which is also a good one. If in January we're seeing it's moving to around 13 or 14, it's also good.
Expectations are that it's getting to 13.25.
It's also a good news, and that also form the kind of decision we expect to see from an MPC meeting. For me, being the first MPC meeting for the year, I'm not expecting either a cut or an upward to go another hole to also watch the whole thing before starting the board. When we are seeing positive macroeconomic data, it's a pointer that yes, it's also going to impact the company that are on the exchange, because we are operating this economy. The more we are seeing lower inflation, the more people consumption will also improve. That means the food and beverage sector will remain also attractive for investors. And also for me, knowing that we are seeing stability in our FS, who the beverage sector who's involved, the manufacturing sector can also plan effectively. Also, we are seeing the bank become solid with a good capital base. All this is going to drive the economy going into the future. I believe that now is the right time for investors or traders to combine their technicals and their fundamental. Earnings, expectation is another good thing. We have seen the performance of this company in previous year, which is the first quarter, second quarter, third quarter. We have seen also on the third account. But the few account that came that audited yesterday, we saw the Infinity Mortgage Bank releasing corporate action, positive audited account, declaring about 35 kobo dividend and 1-for-1 bonus. This kind of corporate action is what will further drive prices up. That's why I said we're entering an environment or a stage that this news will support further movement. But one thing is very, very key, like I said at the beginning, is what? Liquidity. We have seen that the PFAs are shifting from fixed income to equity space now. That fund entering the market is chasing those high cap stocks because they are long-term investors, and also they are looking for what defensive stock also to be. Don't forget that in our market, we have a rule that you must have 100,000 in terms of unit to change price. And for those high cap stocks, because it takes big volume of funds to change their price, if the PFA is locking themselves there, the company are paying dividend, you know that price coming down is just on a small possibility coming down. But for those that are paying the stock, they are the ones that if this company fails to bring good corporate action or good audited account, the price will also pull back. Then it's for us now to see in between the resistance and the support level, where as I said, technicians here and fundamentalists have to combine all their knowledge to want to play this market at this level. If not, people will get their finger burned. We have seen that also the upper side of our market potentials are still there. We have not seen Dangote refinery coming to the market. We are expecting to see the fertilizer coming to the market. The merger between NASCOM, sugar and rice is still come this 2026. That means also we are hearing rumor that NMPC is also coming. This is going to bring more liquidity in the market. Also, we are going to see index galloping. That's why I say index is not a true for me to see that investors are making money. It is when you are individual stock, your portfolio, the sector you are playing is giving more. That's where you can smile. Index, a lot of factors drive index up. Then pay attention to sectoral index and also make information by what? By looking at earnings, price potential, looking at your technicals to make that decision.
Speaking of it, you mentioned getting fingers burnt in the market, but for investors sitting on big gains right now, how should they protect their profits without exiting too early from the market?
I think I like this question. In Nigeria market today, I'll see it anytime, any day. Many players know when to buy stock, they don't know when to exit. That's why when we are looking at your portfolio, we are seeing paper profit in green. You have a target. That's why I said trading your plan, your objective is very, very key. If at the point you are entering a stock, you have said that I'm going to make 30% in these stocks. You hit that 30%, doesn't stop you for taking your profit. Even though it moves to 50%, it doesn't concern you. But now I tell you that you can take profit, taking profit slowly. Especially if that company has all it takes to go further up. Especially those that have good fundamentals. Also, there are reforms, there are government policy affecting their sector positively. You can take your profit slowly. Don't be looking at I'm making 400% return. The next day, if you free, that 400 can turn to 200 return. If you are taking some profit at 100 return, it also is good for you because there are some stocks that has potential that you are not in. As you are taking profit from those that you're not keen to those that means automatically you are growing your world, the whole portfolio. Not individual stock that you are making 100%, other stock you are making a negative of 50%. You are not making good decision. That means as you are making profit, those stocks you are not in that have fundamental, take profit there and plug in them because you also try to build a portfolio that also will move on, not only just individual stock in your portfolio.
Okay, so you're saying this is the right time to take profit or just to consolidate?
No, this time to take profit, but take it gradually. For those companies that have made money, for those that are yet to move, that have potential, they will still go up. But those that are at their peak, that nothing is supporting the price, be careful. But then, if possible, we can sell now. If possible, take your profit gradually and move to where there is what a kind of defensive nature in them. Because I tell you, with the sectors within the media company, there's history to guide you where to put your money at this point. For me, for those that are in all those high cap stocks, especially in oil sector, you are safe a bit. Even though when Trump is trying to put crude oil price down, we know that most of them are into gas business. Gas business, that has booming all over the world. Gas is, and those companies are also in that gas sector. They can make money, and all that business they are doing. For me, I believe that as an investor now, look at this company that has some, that characteristic of defensive in nature. Today, Stanbic IBTC is one stock that, in banking sector is a defensive stock. You can lock in there. We are seeing the life of Zenith Bank and GTB. Those ones, if you are looking at dividends, you pay attention to that dividend, they give you good dividend, even with their price. Fine, that means, there's different stuff to play around for different reasons. Okay. That's why you must understand this market and key in at the
So I have one question. So what's that one sector investors should avoid today and why?
Like I said earlier, they will have some stronger sector and some weak sector. That sector tomorrow can become the stronger one because in equity possible rebalancing, sector rotation is key. The sector that delivering today might be one that will deliver tomorrow. What you now do now is that if you know that the one that is strong today can make money, and you are seeing potential, those that are weak sector, change it tomorrow. For example, now I said that insurance was among the weak sector year to date. Now even though they are getting gradually, but you are seeing potential in insurance. If you have made money in those strong sector for now, after to take your profit and key into some insurance company that has good fundamental that are leaders there for now because they are one turn. Because I tell you that in stock market, all stocks does not move at the same time. They move for different reasons at different time, and that is why we have no stock market. But they cannot be all the stock are moving today. No. One will be lagging, tomorrow that lagging will become also a leader or a leading one. But to me, now that we are seeing where we have made money, now that we are seeing some lagging, kind of quality or in insurance company, but there are some stuff because before now, insurance have rallied, people have made money, they sold down and now that we are seeing that other strong sectors are now strong now, they are making money there, take some profit and key into some insurance company that you know that they have potential to. That is the way to, it's not that because it's, for now they are lagging, sector, you don't look, no. There's some of them that are still going to do that. The first that will lead to recovery in that sector, key in them and stay. That's right to be.
Definitely. So all sectors are a play for investors.
Yes,
so
but there's always a stronger one at a particular time and a weaker one. What means that sector rotation or possible rebalancing will continue in any market.
Okay, so as the rally continues, investors should be working out their valuation.
Exactly.
They should be balancing their portfolios.
Where to live,
they should look at earnings.
Exactly.
And also macro signals.
Exactly.
And that will help them to decide whether to stay invested or to move around, rotate sectors or take profits.
Exactly.
We'll keep tracking these moves.
Profit is key. That if you are a profit, learn how to take that profit. If not, the market will also take profit for you. Because if you are making 50% and you are still to make 100%, next day, there's a set line in that stock, that 50% become 10%. You will not be kind that, because you fail to act at the right time. You know how to take profit in the market. It's part of market dynamics. Not only to buy. As you are buying,
no way
to take profit too.
Always great to have your perspective. I'm Professor Modian, Chief Research Officer, Invest Data Consulting. Thank you so much for coming on.
Thanks for having me.
And